Alright, good afternoon everyone. Today is Wednesday, the 4th day of June 2025. So, I have some things that I want to show you today. And we want to get into trades too as the trades come along. So you see the background color is blue, the background color on this one is red, the background color on this one is red, and the background color on this one is blue. When you have a blue background color, you're going to be looking for the long opportunities, alright? So over here, this just gave you one right here, where it went into the oversold, and the background color was blue. You could have gone long on the open of this bar right here. That would have been the place to go long. And this is gold GCQ contract on a 9 range. This is the Russell on a 9 range. This is the S on a 9 range. And this is the NQ on a 47 range. I'm sorry, the S is on a 7 range. The NQ is on a 47 range. Now, something is off with this because I have an extra. Yes, let me just get rid of something over here. Oh, I guess this is the old one. Let me just get rid of this. You see, when you have a little purple thing like that, you see that little purple thing right there? That means there's an update available. And if you click on that, it'll bring up this window. Right here you can see check what's new. Alright, so I want to go over that with you guys really quick. Alright, if I hit check what's new on that, then it's going to bring this up, the TV Trades range trigger. And down at the bottom, it'll say what I did. Added the ability to make the background color match the TV Trades tool by cell area codes. Alright, that's the new thing that I just added in for you. Okay. So if I just hit that and then do update to latest version, it'll update to the latest version and put on all the default stuff. So you just got to go in there and redo the default stuff, shut off all that stuff. A lot of that's going to go away just by choosing display optimum trigger. You see? Did you see that, Wayne? Just by choosing display optimum trigger, that resets a lot of things on this side automatically. Okay. And now, if you want to get the bar colors up here to match the colors down here, uncheck that, and the bar colors up here will match the colors down here. Okay. Because I created something that I want to talk about, Larry. This one here. I'm going to get into that in a few minutes, okay? And the question was, why did I add this second trigger here and then hide it? It's because I created something that I want to discuss with you guys. And that's it. Alright. So, let me go over that one more time. Wayne, just in case you didn't catch that. Alright, I'm going to get rid of this right here. Okay, I'll just shut that off. And then come in here and add a new one. Go to indicators, then go to add-on a range trigger. Okay, and then come in here and put in the password. I'm going to change the password next week, so it doesn't even matter that you see it right now. Okay, now, when I say okay to that, this is what it looks like, right? It's got the default stuff that's on there is the conservative trades, right? It's got the green and the red. That's conservative colors, all right? Now, the green and the red are going to match with the background colors. This is something that I want to discuss with you guys. I want to just show you and discuss with you and see what you guys think. Because a lot of you guys are most everybody in here is an actual subscriber. So I want to hear your opinion about this, okay? Now this is what it looks like with this, right? And that's good. If you're just trading with the background colors and all that, that's great. It eliminates some of the trades. It'll reduce the number of trades so you're not over trading and things like that. Okay, but ideally what you want to have is you want to trade when price comes out of the overbought on a background, on a red background. If it comes out of the overbought, that's the conservative way. You would sell when it comes out of the overbought. The aggressive way is you would sell when it goes into the overbought. Alright, so these colored bars are kind of a conservative, aggressive way of doing it, because it's suggesting that when it's red and it's going into the overbought, you can probably sell when it's red and going into the overbought. But the real conservative way is to wait to come out of the overbought. That's the real conservative way, is to wait for it to come out of the overbought with the red background. Now, alright, there's a lot of things that go into all this stuff, right? Kenneth, you had some questions for me. Don't forget to type them in, okay? If I don't answer your questions, if I don't answer anybody's questions, don't be afraid to type them in again, okay? Because I'm going to try to get through a whole bunch of things. But, the markets, I say this every time, the markets are always doing the same thing, right? They're always going up and down, right? And so we're trying to get in. What the heck, why isn't that drawing? We're trying to get in. We're trying to get in when it's, how about this one? Does that one draw? No, none of these tools are drawing. So if I grab it over here, does it draw? How about if I save this? Will I draw now? Let me go back to the arrow. Will it draw an arrow? No, it's not even drawing an arrow. It's just read only. This is aggravating. Okay, I'll just create a new one. Let me just create a new chart. Okay, or let me go to a different one. Let's go up to 4 wide or 5 wide. Let's see what we got on this side. Or maybe it'll draw on one of these. Maybe that's what the problem is. Sorry, I gotta fix this drawing issue because I'm gonna be drawing a lot. And it's not drawing on any of those. So if I hit save, it doesn't draw. Let me do create new layout. New one, 2. This is all you're going to do to create a layout. Watch this. From scratch. This is how you create it. You get rid of that. You come up here. You add in TV trades. Okay. And then you add in the TV trades range trigger. So the TV trades didn't trigger yet. I don't know why. There it goes. It's taking a minute. That's all you have to do to put the stuff on your charts. Alright, if you have permission to it, if you have it enabled, that's all you have to do. Now the stuff is on your charts. Alright, so right down here you see this is all blue. That's because it doesn't have the password in. You have to be a subscriber to be able to use more than the basic range trigger. This is the basic range trigger. Now you have to be a TV trade subscriber to get more than the basic range trigger. Alright. So what I'll do is come down here and I'll just throw the password in. Okay. And now this is what it looks like. See? Now it's got the conservative bars going in here. Alright. That match up with the green and the red up here on the price. Okay, you see that. Now these arrows, these are the regular TV trades arrows. These happened at the beginning of the trend, and this was something I think, Kenneth, that you had asked about. Alright. I think that you had said it's not giving it right here when it changes. It doesn't give it on every single one. It's got to have the price action on the bar before it has to be correct for you to get that. Alright, it's not going to happen on every single color change. And by default, it only has the longs on. Alright, so you'd have to go in here and put the shorts on to see the short ones. Okay. To see the red ones, you got to put those on. If you want to have the red ones, you got to put them on. Alright. Now that is just your basic default setup. It's not putting anything special on. I mean, you don't even need the trigger for that, right? You shut the trigger off. You don't even need the trigger for that. Alright. That's what that's about. Now the bar colors, when you just have that on, you just have the basic TV trades on there, the bar colors up here are suggesting when it's going to change. Like if it's all blue, it's all blue, it's all blue, and you get a red one, it's suggesting the next bar could be the change of the color. Right? Right there. It's saying the next bar could be the one that changes the color. This blue one on a red background, the next bar could be the change, and it is. The red on a blue, the next bar could be the change. It didn't give you the actual arrow there because the bar price action wasn't right. But it's usually going to give you that before. Right before you get a color change, you're going to get a bar color change. Okay? You're usually going to get that. Usually it's going to be the bar before. Sometimes it'll be a couple bars before. Sometimes it'll be right in the middle. But usually it's going to be 1 or 2 bars before. Okay? Usually 1. And it's just a heads up. Now, there's an alert that's attached to that. You know, you can create the alert for that by going up here. If you just choose TV trades on this. And the alert for that is the sell advance notice and buy advance notice. Alright. When you get this blue bar right here, if you have this buy advance notice checked, you do 1 per bar close. Then you can come in here and give it a name. It says buy soon is what the default is on it. You can put a symbol in there if you want to, whatever you want. Like I could say this is what, gold, right? GC9R buy soon. And if I hit create on this, you got to have this once per bar close checked, right? So it only happen 1 time per bar. You don't want to have only once because it only happen on 1 bar and it'll not work again. You want to do once per bar close. Alright, open-ended alert. Now for me, I can do open-ended alert because I'm premium. But a lot of you guys, if you're not premium, then you're gonna have a time limit on your alerts. It's gonna be like a month, 30-day time limit on your alerts. You'll have to go back and redo that, right? If you use an essential. But anyway, I hit create on this, and it's gonna create the alert, and it's gonna put it right over here, right? It's right here. This is the alert that I just created, right here. All right. Now that's gonna show me before you get the color change. It's gonna give me an alert most of the time, right? That bar right there would say, get ready, there's a trade coming up. Get ready, there's a trade coming up. Right? It's going to say that every time. Well, not every time, right there it didn't. But it's going to say that every time there's a blue on red, it's going to say that. right? Every time there's a blue on red bar like that, it's going to give you that alert, right? So we would have done it twice right here. And then you didn't get it. But that's how you set that alarm, that alert, okay? Now, the next alert that you want is the alert that's on top of the actual arrow, right? I'm just starting from scratch here because I haven't done this in a long time. And I actually want to play some trades here, so let me get into that too in just a minute. But, well, let me get into the trading too. I know you guys, some of you guys are reaching to do the trading. There wasn't a lot going on today after the morning session, so I was kind of prepared to not have a lot going on. Let's jump back to the other layout that I had, because that's got all the things on it, so I can actually do some trading with that. Okay, in here, and let me find my DOMs. I gotta make sure my DOMs are actually visible to me. It was really kind of slow this morning. The trading was kind of slow this morning. I was up pretty good, you know, at the end of the session. I think I was up $750 per contract or something like that. You know, so $7,500, I think, is what I was up. I can tell you right now, $750 exactly. But let's see. As far as trades go right now, we have a red background. So we looking red background here. Be looking to, in this case right here. Now, I did a video about this morning, and I started to go into it when I was trying to draw, but I couldn't draw on those things. Can I draw on that other one? This one? This one? It was out of the layout that I had. Can I draw on this one? Nope. Can I draw on this one? Yes. Okay, let me just close this one. Leave that. And we can draw on this one, so this is good. Let's look at gold right here. Okay, let me choose gold and we'll draw on gold. Okay, so what I was trying to show you earlier is that the markets are always doing the same thing right there. Going up and down, up and down, up and down. And now you can see it's got this on here, so you have a pretty good idea of what's going on with that. Now that alert that I created over here, that alert is still active, even though I don't have that layout open right now. I want to explain something about this. Okay, because right now this has gone up into the overbought. It's got a white on it, so it suggests that you should sell it right now. Okay, and if you would have sold the open of that bar, you'd be in profit right now. That's what that suggests to you. Okay. Yes, what I'm going to suggest to you about that, Wayne, is go out to this webpage and just watch this video right here. Right, watch that video. There's 15 minutes of me talking about it right there. But there's some things, once you watch that video, I'm going to go over some things in here. What the heck did I just do? Okay, we just have this one. Right? So, this is one I can draw on, right? Yes, okay. So, you would have been going short when the white went up into the overbought like that with the red background. It suggests that you can go short at the open of the next bar. So you could be going short right there. Right? You'd be in profit on that right now if you did do that. Now, let me explain something else to you. All right, the markets are always going up and down, right? And that's what I was trying to draw for you earlier. They're always going. Oh, come on, man. They're always going up and down like that, right? And so, when you're doing this, what it's going to do is it's going to get you in right up here at the top. That's aggressive. If you wait for the conservative, when it comes out of it, it's going to get you in right here once it starts going back down, right? So when it's going back down, the first area that it should go to would be right there. Right? So in this case, that would be right there. That's what you anticipate, right? Is this new to anybody? I'm just going through a bunch of things that I go through all the time. I just want you guys to see some things. All right? I want you to learn how to trade it. I mean, it'd be great if you can just follow the instructions to take the trades when they happen, and you can do that. But having a little bit of an understanding of the nuances that make the things do what they do is probably important too. Now, you can't just be a robot and turn it on and take the trades as they come, and you're going to do okay, but you have to be careful you don't overtrade. Okay. Now, that was a lot of words. It's 2:47. I haven't taken a single trade yet, but I wanted to show you this because the entry would have been right here at the open of that bar right there. This bar right here. The entry would have been the open of that bar. right? So you'd be in the money on that trade right now if you took it. The conservative way to take it would be when it comes out of the overbought. When you get a down close on this bar, that's going to take this out of the overbought and put it down to about right here. Okay, like that. All right, we'll put it way down there instead, down here. Right, but that's the conservative way. Now the problem with this is that your first area of resistance is right here at the swing low. Now if you did it the aggressive way, you did it from up here, this would be your first target area, right? Now it's your first area of resistance. All right, your target area is going to be the whole leg length. If you're doing it the conservative way, your target area is going to be the whole leg length. It can also be the same target area if you're doing it the aggressive way. But with the aggressive way, you would have been entering up here at 1.7, and right now you'd be up 17 ticks. That's $170 a contract. It's $1,700 for me because I trade with 10 contracts on. Big difference. You know, if you did it the conservative way, you'd be in right here at 0.8, and right now you'd be up 11 ticks. Whereas if you did it from up here, it was a full bar earlier. Fred, first time here. Okay. Fred, what do you know about trading? Do you know anything about futures? Do you know anything about charts? Do you know anything about TradingView? Do you know anything about indicators? Okay, so I know I didn't take this trade, but what I wanted to show you is what I like to see is usually when price pulls back, it pulls back to the 50% level. And so that would be, in this case, I would be about right there. I like to see prices do that. Right? I like to see a nice orderly market where it does things the way that it should do it. And in this case, it went down here. It should go up here and then go down here. This leg should repeat itself. This one right here should repeat itself from here to here. That's what should happen. That's what I was talking about. If you did the conservative way, that's what your target would be. This area down here. Okay, if I draw that for you this way, we'll just go here to here, like that. Okay, and then you can just take that. You can take this, not that. Come on, man. No, that. That's what I was trying to do. Take that and move it over here. Okay, so I was eyeballing this, but this would actually be over here. And this would go down here, like that. Okay, so that's what it should do. Now, what it does do, I don't know. It's now 2:50, so we should have, as we get closer to the end of this session, closer to 4 o'clock, we'll probably have some movement that we can trade. All right. I know right now you guys are reaching to see me trade and all that, but I'm not going to trade when there's nothing to trade. All right. I'm not going to force it. Been swing trading for 10 years. Platform is Thinkorswim. Okay. Well, Thinkorswim is good for swing trading, and it's good for options, and it's good for equities, but it is not good for scalping futures. The DOM that they have is clunky, and their rates and their margins are too high. Unless that's changed since Schwab bought them, but I don't think so. But this is TradingView, by the way. TradingView, it costs, let me show you. Well, I'll just tell you. TradingView, the essential package is like $16 a month, and the plus package is like $25 a month, and real-time data is $7 a month. So for $30 a month, you can have all this that I'm showing you right here, as far as the charting package goes. The indicators, that's different. That's $25 a week if you want, or you can do it monthly if you wanted, or you can do it annually if you want. I didn't go over any of that stuff yet, have I? I guess that's right here. If you go to tvtrades.com, or you can go to targetviewtrades.com, either one. Click on that. It's going to be down to the bottom. This is what it costs: $25 a week, $90 a month, or $9.97 a year. Those are the different plans that I have going on. It says free 3-day trial here. If you do it through here, you're going to have a free 3-day trial. If you do it through the email that's going to be sent out after this meeting is done, you'll have a 4-day trial. So if you guys want to take the trial, wait for that email. All right, you can do it right here if you want. 3 days is going to be enough for you. But if you want to wait for the email to come out, then everybody that's in here right now is going to automatically get an email sent out by GoToWebinar. And it'll have the link for a 4-day trial in it. Okay, so what we have right here is an opportunity to trade the ES. Here it is. All right, so what we're looking for, now the conservative way would be to wait for the down close. All right, the conservative way would be to wait for the down close on this. Now, what I was just explaining to you a second ago about price moving in patterns, right? The pattern on this would be like this. Okay, so right here is a 50% retracement level of that. Ideally, you want to go up there and hit that 50% retracement and then bounce off of that level. Ideally, that's what you would like to have. Okay, and you'd want to trade. For me, the aggressive type of trade that I want to do is when it gets up there, like you almost have one over here on the NQ right now. Let me draw it for you. Well, we have a blue background, so it's kind of different. The blue background, you're going up like this. Okay, so the entry point on the NQ would have been right in here. A long trade on the NQ right in there. Right here. Okay, at 80 and a half. 80 and a half would have been the spot for that long trade. While the ES is giving you a short trade. I don't like it when these two are going opposite each other like that. I don't like that to happen. But you see, you have the red background here, so you're thinking short. You have the blue background here, so you're thinking long. Now, Fred, and anybody else who was the first time in here, I'm saying a lot of words. This is all being recorded. You can go and watch it later. But there's a trial for a reason, right? And if you have questions, you can always email support@targetviewtrades.com and ask questions that way. And if you do subscribe, I'll give you my phone number so you can text me and you can ask me questions that way. Right? So the NQ trade was the one that we could actually take here because it was right there. So I'm going to bump my stop to break even on that. Right? So I have 10 contracts on it, so I'm just going to lock in 1 point. Now this should get up here to the prior swing high up here to 803.50. I have a 75 tick target on this, and my target is up there at 175. I don't think it's going to go straight up there. I think it'll probably get up to about right here and then pull back. So I'm going to lock in some more profit on this. I'm at 803, so I'm going to lock in 16 ticks right there. I'm sorry, is that 803 up to 807? Yeah, that's 16 ticks, 4 points. Now, do always on top on that. Okay. And we're out with our 16 ticks on that one. Now the ES, the better place to enter the ES would be up here at the midpoint. This one actually did hit off the midpoint here. The ES, the better place to enter would be at the midpoint. Now this right here could go sideways. If you get an up close on this bar, it could go sideways up here in the overbought, since we got to wait for the conservative trade anyway. Because Wayne, I'm still working on putting it all together over here on this. The optimized trigger. I'll turn it on for you in a minute. But I'm doing like 6 things in my mind, and I'm trying to get them all ordered right, and so I don't confuse you guys too much. Okay. The question was, why don't I have the optimized trigger on this one? Right? We had the conservative green that went down into the oversold that says you can buy the open of the next bar. We also had the open of the next bar happen right at the 50% retracement. For me, that's a place that's a trade I'm going to take every time I can. All right. If I have the opportunity to take the open of the bar at the 50% retracement, I'm going to take that trade every time I can. Okay. Now the ES, it didn't pull all the way back up and hit the midpoint. That showed a little bit of actually momentum on the downside. The fact that it didn't do that, and it gave us this down close right here, so it came out of the overbought. So the way that this is probably going to come together is it's going to go back up a little bit. It's going to go back into the overbought and then probably come out of the overbought again. I'm not sure, but we'll see. Okay. But that's what I'm thinking is probably going to happen with that. All right, we'll see what happens. But we have 1 trade so far that we're able to take. We got 16 ticks on that. So 16 ticks. That was 80. It's 20 bucks a point. It was 4 points. So for me, with 10 contracts on, that was 800 bucks. And we're still waiting for more here. All right. So over here, I forgot what I was talking about with this. I was saying how far back I wanted to retrace. All right, I wanted to see it retrace all the way back up here, and it didn't. Okay, it's roughly the same thing that I wanted to see here on the ES. I wanted to retrace back here, and it didn't. That's what I look for in a nice orderly market. You're gonna get that to happen. Okay. Vern. You have badges show randomly above and below some candles. Is there a number in the badge? 47, 16, 31 of these pivots. What those show, Vern? Let me show you what you have turned on. Okay. That I believe is down here in the range trigger. And do I have that in here? Where should I have it in here? Oh, maybe no. Maybe I have it up here in TV trades. It is in TV trades. What you have turned on for that is this right here, the beta optimum bar profit value. That's what you have turned on there, Vern. Okay, and what that's showing is from the open of the bar. From the open of the bar, if it's a red one, it's how far from the open to the bottom of the bar. If it's a white one, it's how far from the open to the top of the bar. Okay, that's what that's showing. And that is to be coordinated with a different thing. Alright, you don't need to actually have that on if you're not going to be using it. Can I send you a copy of this? Yeah, let me make sure I'm sharing it. Well, let me create one that I can send to you. Okay, Masood. I'll create one that I can send to you. Like that other one that I had going. Where was that one? Was that in here? I only have one of these. Oh, it was the other layout. I can send you that other layout that I created. Right, I'll send that one. I'll send that one to you. Right, I wanted to get back in here so I could place some trades. So we did get one trade off. The ES didn't pull back up and hit that, but we want to see right now, it's now in the oversold. So this is a good thing that it made it from the overbought to the oversold. Okay, that's a good thing. Now that it's in the oversold, it can pull back up and still hit the 50% retracement here, and still give us an opportunity on the short side from a place that I want to trade. Okay, and you see the background color just changed over here. Now, Vern, did you have a second question? The badges, that was yours. Okay. Okay. There's a bunch of questions that just came in. So I'm looking for trading opportunities, which we don't have right now, anywhere that I really want to take. So let me answer some of the questions while I'm waiting for that to happen. Okay, I'm going to jump over to that other layout that I created really quick. It's this one. And I'm going to share this one out. So right now, I started going over basic stuff in this, right? The very basic stuff I started going over. And to put the range trigger on, Kristen, you go to indicators, you go down here and just click on range trigger, TV trades range trigger one time. Alright, now you have a password for that. So you put in your password. Oops. Okay, put in the password, and then that's going to change it a little bit. Alright, it's going to give you some color down there. It's also going to change up here. Now you have colored bars up here too that match the colored bars down there. Alright. Now that's putting the TV trades range trigger on. That's just the range trigger. And now you have some extra stuff that you can do with it. You know, because you're subscribed, you can do all this stuff that's on this side. But there are a lot of things on this side. Alright. And Kenneth, your comment about choosing one thing, that is a perfect statement, and I kind of got into this rabbit hole of creating new things for you every time, just creating new things for you, and I got to stop creating new things for you and just, make you understand what you have, because what you have is very good. I don't really need to create anything new. What you have is really, really good. I don't really need to create anything new for you. But if you throw the optimum trigger on there, that changes everything, right? And it also changes things on this side. Alright, it enables things that weren't enabled before. Now, what I was saying earlier, the optimum trigger, when the white goes into the overbought, if you're on a red background, that's a good spot to sell. If you're in a blue background, the white goes into the oversold, that's usually a good spot to buy. And I was explaining the difference between the conservative and the aggressive. This is being aggressive. If you just blindly sell when the white goes into the overbought, that's being aggressive. If you just blindly buy when it's going into the oversold with a blue background, that's being aggressive. If you want to be conservative, you're going to wait for it to come out. Alright, come out of the oversold or come out of the overbought. That's the conservative way. Wait for it to join the direction that you had originally with the background color. Okay? So, if you want a lot of detail about the TV Trades optimized range trigger, go here to targetviewtrades.com and click on trigger. there's a video right here. I think this is a 15-minute video, 14-minute video about it, where I go into a lot of detail about it when I first created it. Alright, now I'm going to show you something. After saying all those things about not changing anything and all that, I want to show you something that I created to help you guys. Now let me share this out. I'm going to share this. Let me give it a new name. Let me rename this so it's not that. Let's do rename it 6/4/2025 TV traits. Okay, I'm going to name it that, and I will share it with you guys so you can all have a copy of it if you want. Okay, this is the link to this chart. Alright, I will share this out with you right now. So, here. Anybody that has TradingView that's subscribed, or if you're on the trial, or if you're subscribed, if the indicators are enabled for you, you have access to that right now. You can open it up and it'll have exactly this. Okay, when I save it right now. It'll have exactly that. Alright. So, the thing that I wanted to show to you, let me jump off of this and go back to the other one. And the thing that I wanted to show you, this is one that you had asked about earlier, Larry. I think Wayne, you asked about it too. So the thing about the optimum range trigger is it's going to give you the white when it's got a pretty good opportunity in either direction, regardless of the background color. All right, regardless of the background color, it's going to say, okay, well, you know what, it's going into the overbought right here, and this might be a good spot to short it. So it'd be the open of that bar that you would short it. And right here, it's going into the overbought. That might be a good spot to short it. It's got a blue background, but it's still telling you to short it right there. And then this one said to short it, and you shorted it, and then it went right down here and it said, okay, now you should buy it. And so you can buy it, and it's going in the other direction. Now, that can lead to overtrading. Okay. So what I did with this one down here, if I take this one off, right, and if I take this one off also, then, well, then you don't have any colors up here. Right, if I put this one back on, and then in here what I did is I added this feature. So it coordinates the longs with just a blue background or the sells with just a red background. Alright, the way that the green and red bars did. So in here, you know, you're only going to get long signals in here. Alright, and in here you're only going to get short signals, the white bars. Alright, whereas with the other one, when this was on, and you had it set right, it's not that one, bar color, you had it set right, then it gave signals in both directions, regardless of the background color. Do you see? I wanted to show it to you guys, TM Joker. I wanted to see what you guys thought of that. Because, you know, some of you are using this the way that it is, where you're taking the trades in both directions regardless of the background color. And if that's the case, you can get rid of the background color. If you're using the optimal range trigger for that, you can get rid of the background color and just take the trades that it gives you, and you'll be able to trade back and forth and back and forth and back and forth if you want to. Right? It's like this one right here was saying, well, this one right here was saying to sell the open of that bar, and so you sell the open of that bar, and it goes down, and then right here it's saying to buy the open of this bar, so you buy the open of that bar and it goes up, and you get it. It can lead to a lot of overtrading. So what I did is I created that other thing so you don't have the overtrading issue. It's only going to go in the direction of the background color. See, now you got to put the background color back on. But one of the other features, and this is one of the new thing that I put the background color down here, and that was one of you guys, Ken, had actually, Greg had actually asked me to do this, to create this. So I put the background color down here so you can see it right down here without even having it up here. You know, like let's say, I know a lot of you guys have a whole bunch of other things going on, so you might have like, you know, some crazy moving average thing up here, or any random thing, something that goes on price. There's got to be something that goes on price here somewhere. Here, moving average there. You might have a simple moving average, or you might have a whole ribbon of moving averages, or something like that. up here on price. And you don't want to have the background colors up there. You can put the background colors right down here. Alright, you don't need to have them on up there. If I put that on, you see how they match? They just flow right down. That was a new feature that I was going to show you guys. How have I prevented overtrading before this new adjustment? I only trade a couple hours a day, Eric. So I have a goal that I try to achieve every day, and then I have a certain number of hours that I trade every day. But you see, so now you can have it flow right down if you want to. You don't have to have the TV trades on to see what the trend is from the TV trades. All right, so you can just see it right down here without anything. And this is the one. Which one is this? Okay, this is TV trades. This isn't the one that I gave to you guys. So I'm going to go out to the one that I gave to you guys that I just shared to you guys, and I'll put that on there for you. Okay. So down here at the bottom, if you want to turn that on, it's inside the TV trades range trigger. It's this thing right here. You just check that box, okay, and it turns it on. Okay. Now, I don't know why I have two of these. I think I had two because I was just showing you how to do it. All right. You can't find the link on the chart template. It's showing here in the question section. I might have only done it. I'm sorry. I might have only done it to one person. I might have not done the thing to everybody. Hang on a second. Thanks, Gary. Send to all. There. Can you find it now? Okay. So that new feature, you're talking about the one that just does it in the direction of the red and the blue? Wayne? You don't have that new one yet. You do have this stuff down here. You do have that. I think we have some trades coming up right now, guys. So let me just jump over. Because I apparently had something waiting here on the ES. Yeah. Okay. Let me turn one of these on so I can see what's going on here. Alright. So the NQ, that trade we took a little while ago from over here, we got some profit out of that, and it's now switched around. You have a red background on that, so you'd be looking for an opportunity there. Let me slide this over. This right here hasn't triggered anything yet. Okay. If it does trigger, I don't even know how I did the notifications on that. I didn't really share the notifications, did I? You can have it notified different ways. This is to notify the app on your phone. If you have the app on your phone, it'll buzz your phone and let you know when that happens, like a warning before the trade happens. This is to pop up on the screen. This would send you an email, obviously. This is to make it go to, like, I have things that go out to Telegram, to put a webhook in that goes to a third-party platform. Play a sound on your headset or your speakers, and send plain text. This is really redundant. You don't really use that anymore. That used to say SMS text, and that was pretty cool. You'd send yourself a text message. But they got rid of that about a year ago. Alright. What time is it? 3:11. We only got one trade off so far, but it was a profitable trade. We're up $800 on that one trade. Now, the ES is pulling back right in here, so it's getting to a pretty good spot right here. Let me blow this up so you can see what I was talking about a few minutes ago. Right? This is now a changed leg length. Right? We're still in a red background. Can't really see the red background now, but this is what you're looking at from here to here. So this up close right here would be a good spot to short that. If you get an up close right here on this bar, it's going to bring it into the overbought right here. Be a good way to aggressively short it. Now I don't know that it's going to make it a white bar. It could, it might not, but just structurally, this is a good place to short the market right up here on an up close. Okay, so keep that in mind. The low of this bar, this is a 7 range, so the low of the bar is up here at 88, is down here at 88.50. So you'd be selling right now. You'd be selling 90.5. 90.5. Okay. So you'd be doing it like this on a DOM, just like that. You put it on ahead of time because I know how big the bar is going to be, right? Because these are range bars. I know how big the bar is going to be, so I know if we get the up close is going to happen right here at 90.25. It's going to happen at 90.25. And I want to be short because it's going to be up here in the overbought right there at the midpoint. So I want to be short right there. So you can do this all ahead of time. And this is, when I do this stuff in the mornings, this is kind of why I use range bars and why I do things the way that I do. When you have something that's so structured like this, you can figure out like 3 bars ahead of time whether it's going to be a trade or not. And like right now, I know that if we do get the up close, this is going to be attractive to me. If we don't get the up close, if we get a down close, it's not. All right, because we're not going to be in the overbought. We're not going to be going into or coming out of the overbought. It's not going to be attractive to me at all. What it'll probably do is just stretch this out on the downside, and that won't be bad. That's not a bad thing if it stretches it out on the downside. Okay. It is not in the overbought area. Not yet, Daryl. But if we get an up close on this bar, it will be. That's what I'm saying. If we get an up close on this bar, this is going to go into the overbought, and I'll sell the open of the next bar. Okay. That's what I have ready to go right here. I know where the bottom of the bar is, so I know the top of the bar is going to be right here, 90 and a quarter. Based on where the bottom of the bar is, I know exactly where the top's going to be. So I'm selling one tick above that. Now, there's no guarantee I'm going to get filled. One tick above it, it might close the bar right here and then just go right down. I had that happen to me once today on gold, where I didn't end up getting the fill that I wanted. But but it should probably fill me there. If it goes up here and it hits that, if it closes up, it should probably fill me there. And I could always just jump in one tick lower anyway. But so what I'm looking for here is really just the up close on this bar, and I'm going to sell the open of the next bar if that happens. Okay. So that's, I mean, the whole advantage to doing everything that we do and using the tools that I use that you guys have, the whole advantage to this is that you can plan the trades ahead of time. You know you're in red, you have a red background, so you're looking for shorts. You know how big every bar is going to be, so you know exactly where the bar is going to close. If you know the bottom is, you know the top is. And you know if that's going to be a trade setup. If it does do that, you know if it's going to satisfy the rules. So it just did. It just satisfied the rules. So I'm going to cancel that one. I'm going to jump in right there. Okay. Actually, I think it just filled me on both of those. Okay, so I'm in twice now. And I'm in on average there at 0.25, so I'm going to put my stops in the same place right here. So I'm in aggressively right here, and it did turn white, so I'm in aggressively right here, and what it should do is get down here to the prior swing low, down here to 87. Okay, it should go right down to here right now. See, I'm in twice, so I'm going to move both of those up there. So I'll run everything together right now. Now when I get 4 ticks in profit, I'm going to move my stop to break even. Okay, I might have to do this manually, so because I'll try to do it. I'll try to do it automatically, but I don't think it's going to go exactly right. But if it gets down here to 89.25, when it gets down to 89.25, I'm going to try to move to break even and see if they both go to break even at the same time. Okay, and there it is. So now I'll go to break even. Nope, only one of them. Okay, so I'm moving both down here to break even. And now I'm just going to lock in a little bit of profit on this. Okay. Oops. I'm trying to lock in a little bit of profit. What's it doing? Well, here I'll lock in more of it there. Okay, let me right click and go to break even again. Okay. So there, I'm in it. 90.50. There's a point. Did I only have... I think I accidentally got out of one of those. Okay, so there's a 1.5. I think I accidentally got out of one of those. One of the 10 spots. So there's a 1.5. That's $750 right there. If it goes down here, that's $1,000. That's 2 points, and that's $1,000. So I'm out of it with $1,000. I won't count the other one that I kind of screwed up there. But what it should do is go all the way down to here right now. All right, I did get profit on the other one. Let me go and see what I actually got on that. Hang on. Always on top. I sold. Okay. I sold it 90 and 90 and a half, and I bought back at... I sold it 90 and 90 and a half, and I bought back at 89 and a quarter and 88 and a half. So, I'll show you. Oops, that's not it. I'll show you. Yeah, these are the fills right here. those are the fills there that I just got. So I'll figure out what all that is. But it was pretty good money. I did actually do 2 of them at a time, but I didn't mean to, and I screwed it up trying to move them at the same time. But you see, it did get down to the prior swing low. It did get down to exactly where I thought it was going to go. And so everything that I just did there is what you want to do, right? Over and over again. Now, you see how it gave this long down here? That is what that new one won't do, right? If I put the new one on that I was showing you guys, you won't do that. You mentioned in email exchange one way to trade this. That's what I'm showing you right now, Gary. Okay, I wasn't sure that. I thought somebody else posted that. but on your range trigger didn't turn white as you do not have the new one yet. You probably don't have it turned on properly, Wayne. Do you have the right password in and stuff? Because that should have turned white for you too. Right? If you have the right password in and you're on a 7 range. Yes. And you're not on the ES exclamation point, you're on the 7 range ESM 2025. That should have turned white for you. But it wouldn't have really mattered for me anyway. Right? I would have done that anyway. No, the white is just an added bonus. But I would have done that anyway because it retraced exactly where I wanted to. It gave me the trade that I was looking for. It did everything the way I wanted to do it. So I would have taken that trade anyway, even without the white. So Gary, yeah, one way to trade. Let's go through that. Okay. Now this is something that a couple of you guys have mentioned. You know, it's now 3:19. Man, where does the time go? Today's just been flying by on me. All right, so let me do something really quick. I want to figure out what the heck I just got on those 2 trades, so I can write it down. All right, so far we had that one other trade. What did we do on that one other trade? We picked up $800, right? It was an NQ trade. NQ and 16 ticks. Okay. And now on this ES, the first one we filled at 90 we filled at 90, and then we got 3/4 of a point on that one, right? So 0.75 ticks, ES 3 ticks, and then the other one filled at 90.50, and we sold that one at 88.50. So we got 8 ticks on that one. So total of 11 ticks on ES on that on that trade that I did. Okay. So that is what I just showed you in here. We filled at 90, and I bought it back here at 89.25. That's 3 ticks, and then we filled at 90.5, and I bought that one back at 88.5. So that's another 8 ticks right there. So because I want to get this accurate when we go and look at this later. Okay, which one am I on here? I'm on TV trades. So let me hit this, and we'll get off of this and see if we have trades coming anywhere else. All right. So over here in gold, while all that was going on in gold, this is the way gold looks right now. Let me just show you. Okay, this is the way gold looks right now. You go from there down to there. So a pull back up to here is what you'd be looking for. Now, this could turn into the optimal trade for me, the aggressive entry. If you get an up close on this bar, it's going to pull it out of the oversold. If you get an up close on the next bar, it's going to put it into the overbought, and it's going to be right here at the midpoint. I would sell that every single time I see it. I would sell that. All right. The way this is coming together is just right to give me the trade that I love to do. And Gary, that is something that you can do. The one, there was somebody, Sessions, Wayne, I think, asked me a month ago, what is one trade that I would do every time? And that's kind of what you're asking, Gary. One trade that you can do every time. This is one trade that you can do every time. If you want to do one thing, if you want to learn just one thing, learn this one thing. This is something that I do every single time I can. Now, I know how to do a lot of things, and I do a lot of things, but this right here, we're in the oversold. We need to get to the overbought. It takes 2 bars to get from the oversold to the overbought. If I get 2 bars, it's going to bring me right to that 50% retracement level. I am going to sell the open of the next bar. All right? I'm going to sell the open of the next bar. I'm going to do that every single time. That's what I just did on the ES. I'm going to do that every single time. If these 2 bars get me up here to the midpoint, I'm going to sell the open. And going in the opposite direction, I would do the same exact thing over and over and over and over and over again. Right? I do that trade every single day, many times a day. Okay? Okay, Gary? Did I answer that one for you? And that's a good question, because a lot of you guys, the email that gets sent to you when you sign up for the when you sign up for the trial, it's got a lot of information in it, and it can be overwhelming. I mean, even the number of Telegram channels that I have. There's over 100 trades go out every day in those Telegram channels. I'm pretty sure over 100 trades between all the channels. I mean, you guys only have access to a couple of them, but between all the channels, there's over 100 trades a day that go out, and it can easily overwhelm you. It's for all instruments, Eric. All instruments. When I trade in the morning, I trade everything. This is what I do in the morning, right? This is a 9, a 9, a 7, and a 47. This is what I do in the morning. Okay, so it's for all instruments, and it doesn't really matter what you're doing. Like right here, we're still looking at the gold. We're still looking for the up close here on gold. So what you can do right now, take the gold. Let's just do this from start to finish, okay? The gold right here has a low on this bar of 97.3. So I am going to sell 98.3. 10 ticks above the bottom of the bar. I'm going to sell that. That means I know the bar is 9 ticks, so if it closes at the top, given where the bottom currently is, the top is going to be right here at 98.2. Given where the bottom is, the top's going to be right there. Alright? It might not necessarily fill me in here at 98.3. The last one, I kind of screwed up that ES trade because it filled me there, and I went and got a second one. But it might not fill me in there, and if it does, that's good. If it doesn't, I could just drag it down, and that's what I should have done on the ES trade a few minutes ago. But and it'll give me the fill. But this is where I want to fill, all right? And this is the one trade. If you want to learn just one thing, then learn this one thing, right? It happens again and again and again and again. And I know in the Telegram channels, I want to give you guys all the opportunities that you can, that you want, all right? So we have the swing trades. You guys don't have access to that yet. But we have the swing trades, we have regular TV trade signals, we have, that's this one. We have the micro futures, if you want to trade the micros. I'm going to fix that so it's probably not giving as many, but there's 92 of them in there since the last time I opened it. And this one right here, TV trades futures signals, these are just futures contracts. And there's some other ones in there too. So I want to give you guys as much as I can, but I know it can be overwhelming. It's a lot of stuff. So you don't have to learn all of it. You just have to learn one thing. Learn how to do one thing. If you learn how to do this one thing that I'm showing you right now, that's all you need to know how to do. Okay? Yeah, Eric. Now, the thing that Eric is asking me right now is, first of all, is this the thing that I'm showing you right here, is that about all things? Well, I just did it on the ES. It's happening again over here on the gold. It was on a 7 range on the ES. It's on a 9 range on the gold. It doesn't matter what size range bar it is. It's always going to be 2 bars from overbought to oversold. All right. Well, it should be 2 bars from overbought to oversold. That's in a market that's structured the way that I want it to be. Okay. There's a big difference between what should be and what I want it to be. But in the market that I like to trade in, you're going to have a couple of bars from the overbought to the oversold. Then it's going to pull back a couple of bars, it's going to go back down a couple of bars, and be back and forth like that. And that will get you the market that, see, like this one right here just kind of messed up. So you had a down close with an up move down here. So that's going to be nothing. I'm going to cancel the order here on the gold. All right, you're not going to have a trade there. So you just wait. You just wait for another trade opportunity. That's all. Great, Lane. Lane just learned it and just made money with me on the ES. Perfect. Well, that's, and you made enough on the ES in that one trade to pay for a month's worth, probably 2 months, 3 months. If you had a whole bunch of contracts on a whole year. I made enough on the NQ one to just about pay for a year. And the ES one, I made 11 ticks with 10 contracts. That's like 3 years. Wayne did it with 1 contract. All right, well, that's good. But these Wednesday meetings, they're here so you guys can see how to trade and learn from me and ask the questions that you want to ask. All that stuff all at once. And that's why I made it an hour and a half. Because when I was doing it an hour before, we never seemed to have enough time in an hour. I mean, right now we're coming up to an hour right now, and I feel like I still have a whole bunch of things I want to tell you guys. So let me slow down. I know it is virtual plethora of information, and I'm just rattling off a whole bunch of things. But let me slow down. Does anybody have any questions about what we've done thus far? Let's jump back out here to this one that I created for you guys. Now you all have a link to this, right? And this has just got the basic stuff on it. It's got the longs, it's got the shorts. It's just the very basic stuff. Okay, down here I have the optimized trigger on. It's all the most basic stuff. Now, if you take the free trial, you get access to everything that I'm showing you. You get access to that and all the Telegram channels that I showed you and all that stuff, right? But you really only need to learn one thing. Okay, you're going to Europe on Monday. I am leaving Friday and coming back on Monday. Actually, we are taking some time off. You're going back to that resort we stayed at a couple months ago when we went down for my dad's birthday. We went down to Florida for my dad's birthday. But, you know, then you go down there for a family thing like that, you know, you're spending all your time with family. You don't get to actually enjoy the resort. So, we're going to the same place, but now, just us. So we leave on Friday and come back on Monday. So I'm going to be off Friday through Monday. I have my laptop with me, so if anybody has any questions or things, but I'm not going to be right on top of things like I normally am. Alright, back to the trading. So I'm looking for this right here. What I'm looking for right now, you see how this came out of the overbought right there, went back into the overbought right there. That's what you're looking at for your levels. Okay, you click this and you start up here. That's where you determine the range for your high and low. All right, the high and low in that period, from where it came out of the overbought to where it went back into the overbought in the red area. That's where you determine your high and low within that period. All right. So since then, it's gone all the way down here into the oversold, and now it's coming back up. So it actually resets it. Once it does that, it resets it like that. So it's getting all jammed up in here. I'm going to leave it up here like this because it's getting all jammed up in here. We're probably not going to get a trade on this. This is gold. And so gold trading at this time is not that great. So let me go back here, Eric, to just prove the point that you were talking about, that you asked about. Give me a symbol. You like the YM, right? Did you say you like the YM? So just jump over to the YM, and we'll do the same exact stuff on the YM. All right. Now let's just go through this, little by little, okay? Bar by bar. I'll do this really quick, okay? So, I mean, I know that price is going down and all that right here, but let's just go bar by bar right here, and we'll make decisions bar by bar. Okay, so like right here, you got down into the oversold. So right now, you got into the oversold, you actually put in a little bit lower swing, and that's good. It's not necessary, but it's good. And so you go another bar over, and now it's pushing down again, so you're going to get a lower low. So now, what you're doing, you're drawing from here, the top of this right here is what you're drawing this from, okay? I'll draw it from out here. You're drawing like that. Okay, like that. So, in real time, you know, I'm not showing the other side of this, but this is what you're looking for right now. From the oversold, as you go forward, from the oversold, you're looking for price to move up into the overbought. And as this moves down, you got to stretch it down. Okay, so you got to stretch that down a little, like that. Okay, and as price moves over, you're looking for it to come out of the overbought and come out of the oversold and get up into the overbought. And when it gets into the overbought, you want price to be right here at the midpoint. Okay, so doing this bar by bar, we'll do it all over again. When it comes out of the oversold, you want it to go up into the overbought and be at the midpoint when it gets there. Now, this is going to be really close. All right, it's going to be really close. The next bar is going to be really close. But you know how big each one of these bars are, right? These are 9 range bars. So from here at 575 up to here is much more than 9 ticks. So it's not going to make it on a 9 range bar. A 9 range bar is going to put it below it. So right now, before we even go to the next step, before we even see what's going to happen, I can tell you the decisions that need to be made right here. Right, before we know what price does, before we know the next thing that's going to happen, I don't know how far up it's going to go, but I know the next bar is not going to hit that midpoint. I know that. It can't. It's a 9 range bar, unless it gaps up. If it gapped up, then it could, but it's probably not going to do that. But it's going to be close. It's going to be close. So you have a decision to make. Are you going to take close and just buy the open of the bar after that? If you get an up close on the next bar, you can buy the bar after that. If you are, that's great. That's something you can do. And it wouldn't be a bad thing, because if you do, your stop is going to be up above the midpoint. All right, your stop will be above the midpoint, be up here somewhere. It's not a bad thing. It's not a bad decision to make. But what if it doesn't close up? What if it closes down? If it closes down, it's going to bring this down. You're going to have to adjust your levels, and you're going to look for it to come back again. From there, the midpoint's going to move down. Everything's going to move a little bit, and you're going to have to adjust just the way you're thinking of the next steps. Right? Now, it could just go a little bit up. It could go down some, down to here, and make the next bar close up right here. In which case, it will end up in the overbought, but you're not going to be anywhere near the midpoint. Right? So if that's the case, you're not going to want the trade. Right? You're going to want it to do the next bar close up. And if you do that, now think about this. I know I'm saying a lot of words, but I'll draw it for you. Okay. So right here, we have this stuff that's going down. This is the place we want to get to up here, right? So as price goes down like this, and you get down to the bottom, and you're in the oversold, and price moves up like this, and it gets you to the halfway point like that, right? And then the next bar, if the next bar were to go from here, and give you an up close like that, it would bring you up into the overbought, and you'd be up there at the midpoint, and that'd be great. But the next bar could actually go down first, like this, and then go up and give you an up close right here. So your up close isn't anywhere near the midpoint, but this is still going to go up into the overbought when it does that. Right? And that's what's going to create a flat spot like this. That's going to create a flat spot like that. Alright, so it's going to go up into the overbought, and you're there in the overbought, and now you have to wait for to get to this point here where you want price to be, where you want to take the trade, to get to that point where you want to take the trade. You're going to have to wait, right, for another up close. And if you get another up close, then down here it's going to create the flat spot up here at the top. That's what creates a flat spot like that. Okay, like over here. That's what creates a flat spot. And so then your decision is different. Alright? At this point, you're not going to sell the open of that bar because you're flat up here. You're not going into it. It's not aggressive. Being aggressive when you sell it, when it goes up there, when it's only in there for one bar like that. That's being aggressive. Alright? When it's only in there for one bar. When it's in there for multiple bars, that's when you end up stopping out. Alright? If you're not wise about it, if you don't think about it ahead of time like this, that's where you end up stopping out. So you want to come off of this level right here, but it's already taken 3 bars to get up to it. So it's probably going to go sideways a little bit up there. And so you let it go sideways, and you wait for it to come out of there. Right? So you wait for this to happen right here. And that would be this down close right there. And then you'd be able to get in at the top of that bar. Alright? So you'd be able to get in there, and then ride it down. You'd be expecting it to get down to here, and you'd be expecting it to do this leg length. So you'd be expecting to go down somewhere like that. Okay? So, that's where we're at, decision-wise. That's where we're at with this right here, decision-wise. Okay? I don't know what the next bar is going to do, but I know if it gives an up close, it's not going to be at the midpoint, but it's going to be pretty close to it. If it goes straight up, it's going to be pretty close to it. Alright? So what does it do? Hang on, let's click over here and see. Alright, you see it went down first. I didn't know it was going to do that. It went down first, and this is exactly what I just showed you right here. It went down first, and it gave you the up close, but it went into the overbought on the up close. Okay? So you have a decision to make there. Are you going to be aggressive and take it there anyway? Or are you going to wait for the trade setup that you really want? Now this goes back to what you were asking, Gary. The one thing, right? The one thing. Are you going to wait it out? You can be patient and disciplined and wait it out and let it do the one thing that you really want it to do? This trade's not doing it. Right? It's not going to happen on this trade. The one thing is not going to happen on this trade. But if you were aggressive and you're just doing every time it went in with the white into the overbought, then you'd be selling the open of the next bar right now, and you'd be making some money on it. I don't know how it ended up, but right here, this is working out just the way I described that. Right? It didn't end up working out that way because you can see that the next bar, normally you wouldn't be able to see that little piece, but you can see the next bar is going to close down, and it's going to bring it down. So there you got the down close. Now, I know this is a ton of information. I feel like I should stop right now because it's probably too much. You guys are probably saying, what? But, do you move that fraction of the reversal bar? Uh-oh. Finish watching it later. Okay, you're welcome. All right. So right here, if I were waiting for this trade, I wouldn't do anything right here. I wouldn't do a thing right here. Okay. If I were waiting for this to come up here, I'd say I'm just not going to do anything. I'm going to let that go. And, if it doesn't go into the oversold right here, then it's probably going to turn up anyway. It's probably going to change directions on you. Right? And you can see it does go sideways there. But so right here, it did get down here. So if you did sell it here at the top of that bar, you got some chance to take some profit right here. But this is not a trade that I'm interested in right now anymore. All right? It's got to do a lot of things right now because it didn't get into the oversold. Every time it comes out of the overbought, it's got to go to the oversold for me to want to take another trade in that direction. So right now, it's got to go from wherever it is right now. You see how this one went up right here on the up close? It's got to go down into the oversold before I'm going to be interested in taking another short. All right? This is usually the beginning of chop when it gets like this right here. Yeah. Well, that's what I'm saying, Eric. You can do it a lot of different ways. The reason I created the optimized trigger is so that you could do it without really thinking. You just be mechanical, but you're not going to know it's going to be the white bar until the bar closes, and then it's white, and then you make your decision. But what I'm showing you is how you can be proactive, get your order ready, put your order on ahead of time, and be ready to take the trade. And if it turns white, it turns white. If it doesn't, you can still take the trade. Like this one right here didn't turn white, but it did pretty much everything that I would have wanted it to do. See this right here is a 50% retracement of this leg. That's exactly what I would have wanted it to do. Right? Look at this. Bang. Now, I would have done that probably conservatively, right? Because, yeah, I would have done that conservatively because this wasn't close enough to the 50% mark for me to want to short it at the open. So I would have waited for the down close of this bar, and it would have gotten me in at the same place, just about. I would have waited for this down close right here and shorted right there off the midpoint. Okay. Does all this make sense to you guys? Because this is how you trade. This is a way to trade structurally that, it doesn't matter what market you're looking at, what time frame you're looking at. Like, we just jumped over here, Eric, to the YM because you like the YM. And it's the YM on a 9 range, but I could do the same thing on a 100 range. Okay? So right now, we're at the beginning of chop is what it looks like right here, right? There are ways that you can trade that. But transitioning, we're trying to learn one thing right now, right? You're talking about right now, Mark? Right here? It came out of the top. It takes 2 bars for it to get from the top to the bottom. So it came out of the top and it went most of the way down, but not all the way. It would have taken another down close for it to get into the bottom. But we didn't get a down close. We got an up close on the very next bar. That's why it went sideways. And the bar after that looks like it's going to close up too. Okay, Mark? The question was, shouldn't it be down here in the bottom? But it takes 2 bar lengths to get from the top to the bottom. Usually, if they go, if the bars actually close at the top and then at the bottom, it usually takes 2 bar lengths to get from the top to the bottom. If the bar lengths, if they open in the middle and then they do something like this right here, then there's no guarantee that it's going to move it the way that you want it to move it. Because it opened in the middle and it went up a little bit and then it went down a little bit, so you only have like a half a bar's length for it to work with. Because the way that the math works, it looks at everything. It looks at the opens and the closes of every single bar, and it looks at all the opens and closes of all the bars. And so if you get an open in the middle, if you get an open, it ends up being in the middle. You don't know if the open's going to be in the middle until the bar closes, right? But if you get an open and it goes up a little bit and then down a little bit, then you don't have, a straight bar like that's really going to move it. All right, so we go to the next one. And on the next one, we get an up close, so we're back in the overbought. Now, right here, I wouldn't be thinking I'm going to trade anything because this didn't do the full cycle. This needs to go into the oversold to really show that you're trending. All right, it's got to continue the cycle all the way down, and then I'll say, okay, it's done what it should. It's proven to me the indicators, which are looking at a lot more than I'm looking at right here. The indicators look back way beyond here, and it's telling me, okay, it's okay to take the next trade. You're in a position where it's likely to keep going down. Right here, it's not saying that. It's saying it's in a position where it might not go down anymore at all. All right, it might not get below this level is what that's saying right there. And so I'm not going to think short again until it does. All right. So right here, now it's gotten down here. Now the indicators are saying, okay, go ahead and take another short if it happens. Take another short. All right. Even though it didn't put in a lower swing, this supersedes this. Right? Because of what I just explained, you don't know when the bar opens. You don't know whether it's going to go straight down or straight up, or if it's going to have, it's going to split from the open. It's going to split the top and bottom of the bar. So, time is it? 3:43, 17 minutes. Okay. So we go over one more, and now it's got this little piece of garbage right here. So it doesn't really do anything for you, right? It's got to go from here now. It's got to go up into the overbought to give you another trade opportunity. So now, step back. All the stuff that I was just saying, you got to step back from and look at what you have here. Okay. It's gone from the overbought to the oversold, and come back out. So really, that's what you're working with. That little bit of information right there. Now, you could run it up here because this has never been satisfied. So you could run it up there if you want to. But it's in chop right here. Basically, this is what it really is. And so you're in chop right here. So there are ways to trade the chop. I'm not going to go into that right now, but there are ways to trade the chop. But I wouldn't recommend it, right? Not right now. Not unless you know what you're doing. I wouldn't recommend it. Okay. So right there, it goes back down. You're in the oversold again. So now you're all the way in the oversold. You need to come all the way out of the oversold. Look, it broke out on the downside. This is good. All right. So when you're in the red, you're drawing from the top down. So now your leg is all the way down here. This is good. Now you're out of the chop, and now you're at a place. Look, do you guys see it? Do you see this? Right here? This is setting up the optimal trade right here. You see? Because you're in the oversold, you need one up close to get there, and then another up close to get there. So one up close to get halfway up, and then another up close to get you all the way up into the overbought. So it is setting up right now. You're almost there. Yeah, that's all that's down there right now. Eric. So this is the TV Trades range trigger, the Optimum TV Trades range trigger. All right. Okay, so the next bar, if the next bar closes up, and it didn't, but if it did close up, it probably would have brought that up into the overbought, and that's where I would have sold aggressively, right? But it didn't. It went down. So now we'll go here. Now this one closed up. So the next bar right here, if the next bar closes up, then that would put you in a place to sell aggressively. Okay, you'd be right there at a place to sell aggressively on the next bar. All right, let's go over one more. Bang, right there. You sell the open of the next bar. Sell the open of the next bar. After this bar right here, I don't know what the next bar does, but the open of the bar after that guy right there. I'm going to sell the open of that bar, whatever that bar does. Alright, this is the trade setup that I just showed you again and again and again. If you learn one thing, learn this one thing. Okay? So, if you did do that, this is the YM. It's $5 a tick, and this is a 9 range bar, so it's $45 a bar, or $450 if I have 10 contracts on. Bang. The next one starts right there. It goes down. Now, what you anticipate is that it's going to get below the prior swing low, and not only below the prior swing low, but it's going to repeat this leg length. So you can take this thing right here and stick it over here. That's what you should expect out of the trade. Okay. Now, I don't know what it's going to do, but that's what you should expect out of the trade. All right. So right there, if you would have sold it at the open of that bar, you're now, if you had 10 contracts on, you're up almost $1,000. All right. If you have one contract on, you're up almost $100. All right, and the next one pulls back a little bit. It's pulling back up here right now, but you would have an opportunity. You would have had an opportunity to take some profit out of that. And I would have. When it gets down to the prior swing low like that, I trail my stop really close. That's how I manage my risk. I trail my stop really close, so I'd be out right down here, taking that $1,000. All right, or $900, whatever it would have been if I'd have taken that trade. Okay. How you anticipate the background color change? Is a targeted trade a move back to the bottom of the box, or do you look for a certain number of ticks? I don't look. I have targets that are a certain number of ticks, but that's if you have gaps or something like that. I like to have a certain number of ticks for each trade. But the initial target that you're going to be looking for is going to be the one that's determined by the price action. Okay. I have two questions, so let me just. Come on, man. So let me just read them both to you. Is this? Yeah, this is one. I'm going to save this so you guys will be able to go back. It'll have all the drawings on it too. All right. When you go back and look at this. All right. So the initial target is going to be the swing low. The next target will be the leg length. All right. Now, usually, Vern, if you go here to Target View Trades, no, that's TV Trades. If you go to Target View Trades under More, if you click on Risk Management, down here I have this. All right. Now, it doesn't matter what market you're on, it's what range bar you're using. All right. So it has the stop, when I move it to break even, and what I have for actual targets on those. Okay. It's got all that stuff. It's out here at targetviewtrades.com. Go under More and Risk Management. It's all right here for you to review. Okay. That's what I have for actual targets. Okay, like hard targets. And the soft targets, are the targets that are created by the price action, are the first one is the swing low, the next one is going to be the leg length. But I'm trailing my stop. I almost always exit my trades with a trailing stop. The NQ is the one that really I exit when it hits the target more often than not. Though I did have a couple today that did hit the target. I had an ES one, I think, that hit the target today, and a gold one that hit the target today. Okay. So, anticipating the background color change. If you have a bar color, let me set this over here. We shut off the bar color on this. Okay. Now, did you see how I did that, Eric? If you have the bar colors on in the TV Trades range trigger, it's going to overwrite the bar colors that come from the regular TV Trades indicator. Now, if you get a blue one on a red background or a red one on a blue background, that suggests that the next bar is going to be. Let me just get rid of that for a second. This is what I mean. If you get a red one on a blue background or a blue one on a red background, it suggests that the next bar is going to be the color change of the background. Okay. Now, that's good to have if you don't have all the other bar colors going in there for you. You can turn that one on by itself. But if you turn on the TV Trades range trigger, it's got all these bar colors going on in there, and you can shut all those off if you want to. Bar color, you can shut those off if you want to, and then you just have the regular bar colors. All right, like a red on a blue background is suggesting that it's gonna change directions on you. And I don't believe I have those turned on. I guess I do have those turned on there. Okay. So there's a lot of little buttons and switches. I really didn't want to have that, but that's how it turned out. Alright, it's 3:51. I got 9 minutes left, guys. Let's go see if I can place another trade. Can you see if we can make a little more money right now? This right here is a great spot to trade. If we get an up close. Let's draw it. No, we didn't get the up close. We got a down close. It'd be a conservative trade right there, and this is the YM. I don't even have YM DOM open, so I can't do anything with this. But, alright, and we're on this layout too. Let me go back to my other layout where I have all the different markets, because I do have DOMs open for those guys. Alright, so over here on the Russell, right now, this is what you'd be looking at, right? So you don't have a trade here. Over here on the NQ, this is what you're looking at. Over here on the ES, this is what you're looking at. And on the gold actually just gave an opportunity a second ago, I think. Be looking at that right there. Okay, well, it's kind of late to be trading the gold. It's kind of late in the day. It's 3:52, but still, there's a. Just wanted to show you that. Okay. One of the videos showed divergence of the range trigger. I don't really want to get into that, Kristen, because showing the divergence in there, that's for trading in chop. Okay, so we don't really want to get into that. Mark, in classic TV Trades, how does the table that TV Trades creates with a stop and 3 to 5 targets based on pivot points? Oh, so you're talking about the trade table that I don't have showing anywhere. You're talking about this trade table up here, right? This one here, the risk reward and the targets. This is what you're talking about, right, Mark? I wasn't sure. I totally forgotten I made that. I wasn't sure what you were talking about with that. Okay. All right. That stuff that's in the trade table, the risk reward and all that that's in the trade table, is not related at all to the stuff that's in this risk management thing. It's not related at all to that. The stuff that's in the trade table is based upon prior swing highs and lows. Okay? It's based upon prior swing highs and lows. It's not based upon any of this. So to further your question that you would email to me, if you go to like a minute chart or a range chart, a minute chart or any other time frame chart, this is a good spot to trade right here on the NQ. If you go to any other kind of chart, other than range bar, I'm just going to throw my stop and break even because I'm not really managing it very well. But there's a short trade right here on the NQ. I'm going to lock in some profit on that. All right, lock in 4 ticks. And it should make it down to the prior swing lower here. It should go down to 748 and a quarter at least. And we're out with just 4 ticks on that. All right. And I have a gold trade too. Sorry, the gold trade is going over here too. I gotta go to break even on that one. Sorry, that was down close from right here. Might have been here. I'm actually gonna lock in 5 ticks on that. Write that down. NQ, we got 4 more. So up to 20 on the NQ, and the gold, we got 5. Okay. Now, Mark, any trade on the ES right now? There was. I didn't do it though, Wayne. It's too late because it's already gone into profit enough to take the stop to break even. But you could have just done it right here. A conservative trade off the midpoint right there. But good eye though, Wayne. Mark, what you're asking about, in the table, in the target table, not this, but in the target table, that's part of the TV trades. It's part of the sniper actually. That stuff is pulled off of the prior swing highs and lows, and you can see it if you put the target lines on. You can see where it's pulled from. Okay, you can see where it's pulled from, and that is not related to this stuff at all. Right? This is based completely on range bar stuff. And if you were to go to a time-based bar, then that stuff in the table is exactly what you're looking for, because that's based on prior swing highs and lows. Okay? You took that one too? Good, Wayne. Good. So you got enough profit for, well, a couple of months in here today then. You know, if you guys want to do that, if you guys just want to wait until Wednesdays and trade with me on Wednesdays, you know, pretty much every Wednesday we're going to be making money. So if you sign up and you only trade with me on Wednesdays, then pretty consistently you should be able to pull some money out of the markets. Alright, it's 3:56. Classic TV trades. Okay, I answered that one. Vern, I think I answered yours. Eric, I answered that one, I think. Alright, I'm just going through the questions here. There are a whole bunch of questions, and I appreciate the questions, alright? But if you asked a question and I didn't get it, you can, that's already out there. This is already out there, Daryl. To add these colors down here is already out there. Well, this stuff right here is already there. The one about making the color changes match the background color, that's the one that's not out there. But this one is out there. This piece here is already out there. You gotta just delete the ones that you have on your chart and add a new one. Refresh your chart, so click refresh like right here. If I hit save on this and you hit refresh on the chart like that, do that, and then just go down here and delete the trigger that you have on there and add a new one. Just delete it and go in here to indicators and add a new one. Right? And you'll have that option. It'll be right here. Right. Oh, I'm sorry, it won't be that one. Sorry. It'll be this one. It'll be this one. Right here, match TV trades buy and sell area. It'll be this one right here. That was a new one that I'm still working on. It'll be this one right here. Okay, that's the one that you'll have. It'll match up the colors. Okay. Yes, that is the one that you should be using, Wayne. Okay. How did I make the bar colors similar to the background colors? Yeah, did you refresh your charts, Daryl, and then delete it and add it back on? Right, just close TradingView and open TradingView back up, and then get rid of the range trigger that you have on your chart. Just delete it and add a fresh one from indicators, and it'll be there. All right. I did this way so I don't have to go out and do it individually for different people. Right, I do it in one place and you guys all have access to it. If you have access to it at all, you have access to the changes. Okay. How did I make the bar colors similar to the background colors? Similar to the background colors. You're talking about just when I had this one up here. Hang on. I hit save on this, and you're talking about this over here. Is there a video? I'll show you what the fib settings are. Hang on, Ken. All right. You're talking about just having the bar colors in here be right. So if you get rid of the range trigger and you want these here to be the right colors, that's inside the TV trades. All right. Now what you're gonna have to do is make sure it's just the bar colors in here. Bar color right here. Okay. Turn that on. Inside the TV trades. Now what you're gonna have to do is make sure that it's not overwritten by something else, because if you turn this on, there are different barcodes in here that are gonna overwrite everything else. So you gotta make sure that you turn the barcodes off in there, Masood. Okay. Alright, and is there a video on the fib settings? Let me just show you the fib settings, okay? By default, when you have this thing right here, or this one over here, by default, you know, if you go to the settings in here, it's going to have a whole bunch of things turned on. If I go to properties, settings, it's going to have like that, oops, that, and that probably turned on. You're going to have all those things on there. I only have the 0, the 1, and the half turned on. Right, the 0, the 1, and the half. And I don't have them extending the lines. That's how I have it set up. Okay? Alright, you have a great vacation too, Wayne. We'll see you in 2 weeks. But I will be here next week too. Alright, I've run out of time, guys. I'll give you a couple more minutes, but we had some pretty good trades. All the trades that we took 2, 3, 4. Wait, I took those 2 ES trades. Alright, 5. I took 1 gold trade, 2 ES trades, and 2 NQ trades. With the 2 ES trades, I didn't mean to take 2. I actually took 2 at once. But alright, bye, Mark. Alright, I want to make sure I answered everybody's questions. And let me say this again. I haven't said this. If you haven't taken the trial, if you're in here, you haven't taken the trial, go to tvtrades.com and click on this. You'll be sent an email automatically after I'm done with this stuff. The email is going to have a 4-day trial. If you go here, it's going to be a 3-day trial. Whatever you want to do, you know, either way. But take the trial, all right? And after the trial is done, it's $25 a week or $90 a month or $9.97 a year. This is the best deal. This is a really good deal. This is like a lot cheaper than that one. This is the most expensive way, but it's the cheapest way for you to get into it and try it out. All right. I wanted to make it really easy for you guys to get in there and see if you like it. And if you're making money with it, keep doing it. If you're not making money, stop. All right. It's only $25. I mean, literally, the pizza that we had the other day cost $25. It was $24.97 for a pizza. Could change your life for the price of a pizza. All right. If you guys have any more questions, you can email support@targetviewtrades.com. All right, support@targetviewtrades.com. When this video is done, I'm going to put it out here at I'm going to put it out here at targetviewtrades.com. It's going to go right here in upcoming and past webinars. You'll be able to join next week's, to sign up for next week's right here or here on the home page. Be able to sign up for next week's in either one of those. That's going to be in about an hour. And right in here will be the recording of this video. This meeting will be right here, and this one that we did last week will be down here. It's already down there. Well, I already written the code for it to be down there. But so you'll be able to get all that stuff, okay? And I'll be doing it again next week. And this layout that I just created right here, I put it on the YM for Eric, but I'm going to put it back on the ES because most of you guys are not going to be trading the YM. And most of you are going to be trading the ES, so I'm going to put it on the ES7 range. But if you want all those drawings to make sense and everything that we just did in there, you're going to change it back to a YM. It was a YM9 range. Alright, if you want those drawings to make sense. Okay. I'll put the trigger down here at the bottom for anybody that doesn't know what's going on with the trigger. I'll put that down there at the bottom. Oops, the trigger's already down there. There you go. Alright, so I'll just save it. You are welcome, all of you guys. Alright, thank you all for coming today. I'm going to wrap this meeting up, or at least I'm going to stop the recording of it right now. And hopefully the audio went really well in this recording and I don't have to do any more.